Today is Friday. It is 4:43 p.m. Eastern Time. It is September 4th, Friday after the close. Doing a little analysis, my thoughts on the market, the steps we took to get here. Obviously, we saw some volatility Thursday and Friday. I'm going to talk you through that, what our game plan is, and the decisions we made along the way to kind of give you an idea. The market is not easy at all. But we want to show you the things that we did along the way to help reduce risk. A lot of things were done very well. Did it prevent the entire dip? Absolutely not. Not trying to hide that. We're very real about that. Wish we had done a little bit better. However, had we not made the moves that we made Friday, it would not be good. So, made some good decisions. Again, if you recall, on Friday, and many of you probably received a lot of paperwork on this. If you're not already, disclaimer, if you're not already have an online account and you have not gone paperless, I've given you the forewarning for 6 months. You gotta do it or you're going to get drilled with paperwork. Again, you can go in, create the online account and change your settings to only have statements or tax docs sent to you. But they have to legally send that to you if you don't set up an online account. So keep that in mind. That's a little house back office work. But here's the week, okay? Despite what we saw the last 2 days, what do you really expect when the market goes up for 6 straight months? I mean, it's gonna happen. This is basically the volatility we had. We had seen something similar to this in June. Understand this. Earlier today, the NASDAQ was down 5, almost 6%. This is for the week, okay? So Monday, Tuesday, Wednesday, great days in the market, okay? Thursday, Friday, brutal. NASDAQ was down at one point today, 10% in 2 days. Not fun, but we're going to show you the things that we saw. We collectively are about 3.8% off the, about 3.8% off all-time highs on our portfolio values. And so our performance was very close to the S&P 500 this week. So considering how ugly it was for many individual names, you have to understand, I'm going to show this to you. A DocuSign, great company, great earnings, down 20% in 2 days. Okay, so many people got killed. Okay, so the moves we made to go more broad-based, more ETF-based, more conservative, more diversified, and out of individual names was the right move. And going to 20% cash was a really good move. Did we do it perfect? No, but it reduced risk. Okay, so that's the whole point there. Let's look at a few things that we normally look at. Okay. The put-call ratio. The summary of all this, you don't have to know really what a put or call is. The summary is this. We were at a very, very low level for a long time. Anything below 45 for a long period, it basically means there's some complacency out there. And we were there for several months. We are just now at 58 as of Thursday. It's probably a little bit higher now, but there was very little volatility. It's going to happen at some point when you have a Tesla up 30% in a couple days. You know what I mean? You got to expect this. We were at heightened levels, okay? The VIX, this is really important, and I want to show this to you. This is basically fear. That's a very broad, basic version. Now, again, the market tends to follow patterns. It's not going to work every time, but it often does, okay? Here is the VIX, basically fear in the market, okay? We call this a hockey stick. You don't want to see fear in the market. It's usually bad for the market. This was as of basically mid-June. Again, the volatility that we saw, like I was telling you, we haven't seen this volatility since June. That's kind of what we're seeing again. Another hockey stick. What I was seeing some warning signs here was this curling up and going up, fear increasing while the market goes up. That's very odd if it occurs for a long period. So that was a warning sign and why we made the moves we did Friday. Sure, I would have loved to add more cash, but at the same time, had I not had Monday, Tuesday, Wednesday gains, you'd probably be even in a worse situation. So again, this was ugly. This got up as high as 38 and went down and closed to 30. I mean, this is not bad. So could we, again, the market tends to rhyme, patterns tend to rhyme, similar candle, similar candle, similar candle. I think we need a little more time. I'm not trying to tell you I know what's going to happen, but on a lot of times, similar to this chart with technology, the QQQ, what tends to happen on dips? First of all, this is a long-term trend of about 6 months, and what do we notice? It basically follows this orangish yellow line. That is the 20-day moving average. So anytime it touches it, I'm like, okay, is it going to hold? Do I need to buy yet? Did not buy. We tested the 50-day, very close to the 50-day. But what do we usually see here? We usually see about 4 candles before it reverses. And with some of the volatility and things coming up, I wouldn't be surprised if we see a little more volatility. Could we go sideways for a while? Wouldn't be a bad thing. Again, could it be another July or June where it was frustrating? I mean, that's a big dip as well. Usually it's 4 or 5 candles. 4, 5, 4. The point being, could we test the 50-day again? It would scare a lot of people. A lot of people will get out of the market. This morning, what did I say last night in social media? I said, you want to see hard red, down red, big time red overnight. It didn't happen. It closed up. And then throughout the day, the NASDAQ went down 5%. That's what I wanted to happen overnight. Now, it was slowly bought and the NASDAQ closed down about 1% today. So it was ugly earlier today. Very ugly. So if you're looking at your account thinking that's bad, should have seen that at one point. I didn't make any dumb decisions and sell. We gained a lot of strength and we're basically really close back to the 20-day moving average. Just below it. We might need more time. That's why I'm not buying into momentum names like this one. I want to be patient. Again, we own this, but a small portion, and as we keep going lower, I'll add. Again, this is a fantastic ETF, but during volatile times, it gets spanked, which is why I reduced allocation in this on Friday. Again, from the bottom to basically June, this was up 148% and went higher, okay? And I trimmed up here, and this from 98, and it touched really close to 80. Guys, it's an 18% decline in an ETF. Imagine had you owned the individual names. That's what I'm trying to show you. To show you, had we owned individual names, like some of these, like this is my watch list that I'm saying, I'm telling you this ahead of time. Over the next week, I will be adding individual names. It'll cause more volatility, but that is how we create gains. Anytime you get a 10% decline in a lot of these names, you got to consider buying. So what are we seeing? We're seeing value continue its trend up. It's doing better than the frothy names. And I'll show this to you. Value versus growth. Value continually outperforming growth. I don't know how long it lasts. If you compare the amount of time from here to here, it's similar. If it's here to here, it's similar. If it's here to here, maybe a little more room. I don't know. I don't have a crystal ball, but usually that's around the time frame of how long value can outperform. And I've been saying this as well. If value can give technology and growth names enough time to take a break, which is kind of what I'm hoping is happening. Like again, value did better. Like we look at current holdings that I own. Again, not everybody owns every one of these, but collectively across all accounts, I own this. Weird oddball one, commodity, was up 4% this week. TLT bonds did well, a conservative play. Who would have thought financials would have been positive this week? That's just trend following. That's why I was in it. I don't want to own financials long. I don't want to own airlines long. But this helped us. I mean, it's down for the week, but the indexes were down 3% for the week. So again, the moves we made were good moves. Did it work perfectly? No. I mean, I had 20% cash, mainly ETF based, as you can see, some individual names. You're seeing what would have happened on a week like this had I not gotten out of individual names. I mean, Spotify actually didn't do horrible this week. A DocuSign is down 20% in the last 2 days. And I'll be honest with you, like, that's a good name, good earnings. So again, the point being, had we been in individual names, this kind of shows you the story. Like, this is a momentum trade, period. When I show you ARK, this is names like Tesla's 10% of this portfolio. It has several other names in here that are momentum pure plays. This sucker was down 20% in 2 days. Okay? Imagine had you been in the individual name. So I wanted broad exposure. I had 5% and added up 5% slowly over the course of the last 2 days. Did it work out? No, it's still down 3% today. The point being is they have not really established a base yet. Now it's doing okay, but I expect a little more volatility. Again, going back to this, we're 3 candles in. It's brutal, but it would not surprise me to see another candle and just some sideways. I want to see some sideways action, build some strength, get some money in. It's probably going to be sideways. I don't know. I don't have a crystal ball, but my thought process is next week I had no confidence in adding any of these names yet, and I'm glad I haven't. I want to wait for more confirmation because, again, a lot of these momentum names, again, are not establishing bases quite yet. Sure, this is a nice move off the lows, but I need some more confirmation. Otherwise, we would have gotten spanked. Okay, so hang in there. Again, the watch list that I'm watching, names that will likely do well. It's very diversified. Financials, beaten down names, even some Bitcoin, for goodness sakes. I have no real interest in there, but it's a momentum play. I'll probably get a bid. Medical devices. Microsoft would not have been a bad play even this week, to be honest with you. But really good names here, names that have gotten beaten down. It was not pretty the last couple days. So in short, these are names that on any dip, I'm saying, man, I wish I would have gotten in these a long time ago. And I've been in these names several times over the last 6 months. And I get out after a big gain and just say, back off risk. Okay, so I'm looking at these names again. It's very diversified. It's definitely not just tech. I mean, a Dollar Tree, no. Zillow, absolutely not tech. Chewy, interested. I'm not sure. I'm going to get in that one. But CrowdStrike is a crowd favorite. There you go. SEC Limited is a great company. I'm interested to see if Fastly will take off. So excited to know what could be opportunities ahead. It's going to be volatile. But here's something that's very interesting. And I love the language that he has on this. If it'll come up. 1 second. Internet's being a little slow. So basically what Ryan Dietrich is saying here, and I appreciate him because he brings up a lot of really good points. Oh, it disappeared. Might have to find this one on the fly. I think we might be all right. Okay. It's thinking, evidently. Okay, so again, this was as of yesterday. So a lot of people are like, the market's too high. We're going into election. It's going to be horrible. Don't assume that. Okay? The market, history doesn't repeat, but it often rhymes. That's basically what he's saying right here. And I think it's a good line because look at the last few recessions. Okay? Look at the similar pattern it has followed. That's right now. So, does it come with volatility? Absolutely. It's going to. 5 to 7% dips are going to happen. But I don't want to miss the bigger move. Again, let's just assume we're at 50% or 60%. Guys, this has some room to run with the Fed helping us, giving us a little tap saying, here, we'll keep interest rates low. So I'm not going to assume this is going to happen. I'm going to watch price action. But I do think the trend is still intact at this point until proven otherwise. We had some concerns this week, but right now there was some buying at the end that made me a little encouraged. So again, next week we're going to be open-minded, and I hope that I can get into some of these individual names. If it goes lower, I will once I see a base established. I'm not really seeing that quite yet. Saw some good things at the close Friday, but still a little shaky and not really seeing momentum names get a bid. And that's where the alpha is created. Okay. So I appreciate your time. I hope this is helpful. Keep your emotions in check. I understand that emotions are very heightened at this point, and it's very easy to say, oh, I knew this was going to happen. Well, you could have said that 3 months ago. And who would have thought the rally would have gone this high? That's why you follow price action and ignore the move. If you're wondering what caused this dip, absolutely nothing. Good jobs report. Nothing happened. It's pure profit taking. And when people take profits and it goes down quickly in these momentum names, it makes the whole market sell off. We were just overbought. That's it. There doesn't have to be a reason. Okay. So basic lessons there. That's why we back off risk when we see heightened levels. When we see the QQQ at an RSI of in the high 80s. Okay. Now we're back to a level. Look, every time it touches around 50, it's been a buying opportunity. I want to see if this holds. If it doesn't, I'm the heck out. It might take a few days. Okay. So that's what I'm seeing. Want to be honest about that. But we have a game plan in place. We're excited about it. We made some good moves in diversifying and taking individual name exposure off the table Friday. And next week, wouldn't be surprised to see us enter into some individual names slowly. It might be something where I pick 30 names and I'm in 1% into each of them and slowly add into each of them over the next several weeks. So be patient. It might be a frustrating next couple weeks, but it will lead to good things. Sideways movement leads to good things, even though it is not fun. What we have seen is not normal. Understand that. So now we have to deal with some of the punches that come with great gains. Hope this is helpful. Thanks for your trust. Let me know if you have any questions or concerns. I'm here. And go paperless if you're tired of paperwork. We warned you. Thanks again. Bye.